Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 17th of March. Now, just starting on the news page, this is the what was expected. It's the same way before every Fed meeting. The market really stalls, right? And the US dollar a little changed ahead of the Fed meeting outcome. So no surprises there. We've still got dollar CAD climbing to 3-year highs, and not much else happening across the board. And it's a little bit interesting because any other time, these weak numbers here, industrial production numbers, capacity utilization, retail sales numbers out of the States, well, it's a bit of a confusing one, right? So the actual numbers were much worse than expected, but check out the revisions of the previous numbers, right? So most of these much better. So they offset the really crap numbers that came out. And so if you have a look across the board here, the dollar index just trading sideways. Now, it's just getting into a very interesting phase because we've obviously got the Fed meeting today, right? And that's the biggest event in the market each 6 weeks. We do have the Canadian CPI numbers here out, a good 5 hours beforehand, 5.5 hours. So a good chance for dollar CAD to sort of move around ahead of the Fed meeting. But with that coming into play, if I just sort of blow up the dollar index, I mean, as I said, there's no surprise here that the dollar's trading sideways, but what we're doing is we're just trading through short-term support and resistance. That's where the market is completely baffled. You can clearly see traders are sitting on the sidelines, sitting on their hands, waiting for the next announcement. And if we have a look across the technicals here, of the rest of the pairs, it's the same way. Right. So technically, a lot of pairs are sitting in the balance, and we've got this major event with the Fed meeting. So it's going to be very interesting for the dollar index. Obviously, connected to that is the euro. Dollar Swiss is just slowly dribbling off. Dollar yen still up, even though it's trading sideways. Then you got dollar CAD going down. So you got dollar moving all over the place in different directions. We've had a dip in sterling and then back to where it was. As I think the UK watchdog came out, or health watchdog came out and said AstraZeneca's like awesome, despite every other country saying it's killing people. So that's an interesting one. And then you've got the Aussie and Kiwi, right? These two puppies here are just hanging in the balance, waiting to see what the dollar does. They're ready to go with the US dollar direction more than anything else. Okay, so to me, we've still got euro weakness here. It's a lead into the Fed. As I said, we get really strong US dollar sentiment coming out of the Fed meeting. Then euros definitely heading down to 117, 117.50. And obviously the dollar index will shoot up. You'll see a correction in the dollar across the board. So the odd duck out here is dollar CAD, right? So the CPI numbers before the Fed meeting are going to be very important. If they're really strong, dollar CAD's going to keep going down. And regardless of what the Fed do, even if the Fed came out with a strong sentiment, it may retrace a little bit, but the writing's on the wall for dollar CAD at this stage, lower. Now, if we get weak sentiment out of the Fed, well, then dollar CAD's probably in the driving seat as far as a pair to be getting on there because it's already trending down. Okay, so that's where we are. Actually, if I just change it back to the risk page, just having a look at what's going on across the board here. There's a bit of a mixed bag here with the Treasury Yields. Okay, some up, some down, some neutral. So that's a little bit of like the US Treasuries that are sitting on the sideline. They're also waiting for the Fed, as are the US equity markets. And just looking at the, actually up the top here, the futures, well, a little change at this stage, and I'd expect that to stay the same ahead of the Fed. Now, one thing you should be doing, like if not every day, every other day, is just having a look at the major pairs also on a daily perspective. And all you're trying to work out is what's their sort of current trend. Now, the dollar index, to me, is still up. You can see dollar Swiss is up, dollar yen is up, dollar CAD is down, euro's down, sterling is still up, Aussie and Kiwi sideways through that trend line. As I said, they're waiting in the balance to see what the dollar does. But this is your overriding trend, and there's less noise in the daily charts, right? So what you should be doing ahead of the Fed is thinking which of the pairs is best if the Fed comes out with strong sentiment or weak sentiment, right? And you can sort of really piece together the best trading opportunities around that. So either way, there's trading opportunities leading into the Fed meeting. And you know what? Don't get cute with this. Don't start putting pending orders in and sort of hoping for the best. This is a situation best because the sentiment that comes out of the Fed, right? Sometimes what they say can be misinterpreted for the first like 10 hours, and then the currency turns around. It's best to sort of see what comes out, see what the impact is, if any, on the US Treasuries, okay, and also the equity markets. Because if you get the answers here, it's not short term. It's actually going to be medium term. So if they're talking about yields and they're going to start buying bonds, well, you know, the prices will go up, yields will come off. That's going to be a weak dollar, right? And that should be a positive move in the equity markets. We'll have a risk on situation. Aussie, Kiwi, Euro should all rally. Dollar falls. Pretty simple, okay? And vice versa. So just be aware, it's smart to wait and see. Professional traders in this market will wait for the Fed meeting. They'll wait for clear clarification of their sentiment and what they're saying, and then we go from there. And that's where the trading is. So don't forget as I was just saying, the CPI numbers out of Canada. You know, it's not quite as important as normal markets because they're not really looking to change rates just yet, but it does paint a picture of how that economy is going. And at the moment, it's looking pretty strong. We need huge variance to get this thing turning around. If the numbers came out like outrageously weak, well, then we might start to see it back above 125. But if they come out strong, then under $124 CAD will go. All right, guys, pretty exciting day and week coming up. It really kicks in from here. All the best. Cheerio.